You just clicked to watch this video. That shows you have a problem with your entering model and you want to solve that problem right away. Don't worry, in this video I'm going to be walking you through a consistent entering model you can apply to your trading plan to boost your trading strategy. Make sure to stick to the end of this video because in the next 10 to 20 minutes I'll be unveiling a consistent entering model that has a 70 to 80% win rate. So guys, welcome back. And today we're going to be using Euro USD to check out the win rate of this strategy I'm about to show you guys in this video. So just stay tuned and make sure you don't go anywhere. And don't forget to subscribe to this channel. Click on the notification button so you can always get notified whenever we drop videos like this. And make sure you share this content to your friends, your foes, and anyone that's involved in trading. Make sure this content gets across to them. So let me not waste much of your time. Let's just go straight to the order of the day. So a consistent trading entering model, which is something a lot of traders have issue with, and we're going to solve that problem right away in the next 10 to 20 minutes. Okay, now let's start. Now most entering models you've been taught online is the regular or the traditional smart money entering model, but I can tell you for sure right now that it doesn't really work that way, and I am going to show you some areas where that strategy failed and caused a lot of mess in the trading system. So, and what is that traditional entering model? Everyone out there knows. So let me just illustrate it right now. Let's say we have a break of structure to the upside, which indicates a bullish break of structure right now. So let's say this is the higher time frame. A lot of people on this YouTube will tell you to enter in this manner, so you wait for prices to get into your point of interest, be it this way, and make sure it has a break of structure. And most of them would say you go for a change of character. Okay, once the price break this recent high, giving you a change of character, and they say you would actually wait for a reversal down to this area of confidence, then you place a buy limit to the upside. Okay, so that is for the buy. And for the sell, most of them will say wait, make sure you see an higher time frame supply zone, okay, and wait for prices to get to the higher time frame supply zone, as they would say. Okay, so once it gets to that higher time frame supply zone, and make sure it comes with a break of structure, and you want to see prices tap into that point of interest or that area of confidence and make another change of character that is taking out this low right now and reversing to that area of confidence for the lower time frame and coming down. So this is what most people trade out there. And do you know what? The banks already understand the strategy, and if you try to apply this strategy in your trading, I can guarantee you over 70 to, let's say, 60 to 70% failure rate in this. Okay, so the bank already knows that a lot of people would be waiting at this area to see a change of character, and not just that, this is going to waste a lot of your time. So this is what the bank does. Let's say we have this area, which is the higher time frame supply. Okay, and prices get back to that area. This is what the bank wants to do. Once they see people enter or wants to take this trade, people are waiting for this area to be broken. The bank would just do something like this and they start selling. And what happens there, you're going to miss, because you're waiting for prices to take out this zone so you can actually enter it this way. So the bank is going to mess up with your brain, and once this prices is coming back, it's most likely going to break this area and gonna cause a change of character on the higher time frame. So this is a problem most people have, and I have actually encountered this problem multiple times in the market. I studied price action and I went to study the chart very well for almost 4 months of my life to get out this strategy, and this is what works the more. I'm not saying this one I'm not saying this doesn't work or this would not work, but I'm just trying to tell you that the bank will try as much as possible to liquidate people that try to use this entering model, because they already understand that people want to see prices this way, breaking this coach line and or change of character line, whichever way you understand this thing, breaking this change of character line and coming down to take out that. So now I want to show you something I call the push and reverse strategy. Okay, this push and reverse strategy, I have checked it and I have validated it that this thing works very well in the market. Okay, this is the most profitable strategy you can use out there. Now remember, there's no holy grail out there, so if you've been looking for an holy grail, I can tell you categorically that you are in the wrong channel. If you are looking for an holy grail, we do not offer holy grail strategy here, but we just try to offer something that could work for you in most cases, in most weather. Okay, because that sometimes that some people's strategy do not work in some weather, but this strategy is going to work for you in most, should I call it trading conditions or trading weather, be it in the raining season, winter, whatever. I'm just trying to joke, but it's gonna work for you in most times. So this is the strategy I'm gonna unveil in this video right away. Now, as you can see, these are my trades I took for the Euro USD, which are the EU, and I use this strategy. You can see in this area I pull up a nice 1-to-9 ratio, and in this other area I pull up a nice 1-to-7 ratio, which was cool. And in this other area I pull up a nice 2.5 ratio, which was nice. And in this area you can see, like I told you earlier on, that I do not have a holy grail that would make you money every time. Sometimes the trades might go wrong, sometimes, but in most times, to be realistic, it is gonna go well. Okay, now look at this. We already have close to like 3 wins, and this is one of the bad days. Okay, that these things are gonna mess you up. Okay, so we already counted just one bad day, and you can see this is another bad day that it's gonna fuck you up. Okay, this is another bad day. You can see here, fucked you up. Okay, this is another one as well. So I like being truthful, and this is a nice win. Okay, so if we're trying to count this, we already have 3 losses, like four wins. Okay, this is four wins, and this is the 5th win, this is the 6th win, this is the 7th one. You can see 7 wins, 3 losses, which is actually good for a strategy. Okay, a strategy. You can see another one. This is the 8th one. So we already counted 8 wins and 3 losses. I'm trying to be real with you. This is the 9th one. So 9 wins and 3 losses. Okay. And this is actually good for you. If we're going to rate this, to be honest with ourselves, we're going to rate it 70 to 80, like I said at the beginning of this video. So I'm going to show you how you can do this and the pros and cons of this kind of strategy. Now, the first thing you're going to do is what? You want to be using just one pair. I want to be real with you. You want to be using just one pair, because once you're using one pair, you can be able to rationalize the wins and the losses of this trade. Okay, so whenever you encounter a loss, it could be easy for you to recover easily than going to another pair, because in another pair you can easily encounter another loss, which would cause a lot of damage to your account or probably blow your account. And the next thing you want to do is that you want to apply good risk management. Risk management is very important in your trading, so this will help you protect your capital in the days where you would be losing, and will help you make an easy recovery when you will be winning. So let's say let's get the days that went bad for us. Let's say we had 1, 2 and 3 days. Okay, these days went extremely bad for us, and it happened in a particular row. We have it here, 1, 2, we just followed yourself, 3, and you have these losses at a very straight row. Okay, it was not no bridges, like no profit loss. Okay, let's say for each losses or for each trade you would lose, you lose just $1, and for each trade you win, let's say 1.2, 1.3, or probably $2 or something. Okay, if we analyze everything, you're gonna still make something around $18 profit and $3 loss. Okay, I'm just trying to do a very simple calculation on this, and I'm trying to tell you why risk management is important and how you're gonna go about this strategy. Okay, now let's go straight to the strategy. Let me not talk for a very long time. Now, the first thing you want to do is that you want to you want to do what? You want to analyze the market on a much higher on a higher time frame, precisely. So you want to get what the market direction is on the higher time frame, so you can know what to do as soon as you encounter prices on your point of interest. Okay, so sorry for that call. So the first thing you want to do is what? Analyze the market in the higher time frame. Now, what is the best time frame for you to analyze this market? To be honest, there's no best time frame for you to analyze the market, but I will tell you to first look at the daily time frame. You want to know the swing high and the swing low for the daily time frame, like I always do. Okay, so I'm just giving you directly my own strategy and how I apply it. Okay, so for the daily time frame, you want to see where the market is on the daily time frame. Okay, so let me just swing into the daily time frame. So for the daily time frame, we got this area as our swing high and we got this area as our swing low. Okay, so once you have done that, I do like to go into the 30 minutes time frame, and I want to use my traditional smart money concept to analyze the market. So I did my traditional smart money concept, okay, to analyze the market. I did my traditional smart money concept to analyze the market. And what else do I want to do? I want to take trades when I see prices get to my point of interest. So this is the 30-minute time frame, and I got prices to my point of interest. And do you know how I get my point of interest? I use my Fibonacci tool. Let's say we have a bullish structure on the 30 minutes time frame, and I want to be looking for my point of interest using my Fibonacci tool. So since it's a bullish structure, I go from the down to the up. So let's do it. So from the down to the up, it gives me this area. Okay, so I just use this rectangular icon to do something like this. Okay, you already know these things. Okay, now the next thing I want to do is that I zoom into the 5-minute time frame, which is where the interesting part comes in. Okay, and now once I go into the 5-minute time frame, this is something I'll be looking for the 5-minute time frame. Let's say we have a bullish structure. Okay, let's say a bearish structure first, then we go into the bullish structure. Let's say this area is our point of interest. Okay, so let's say prices are already tapped into our point of interest. Remember, the last break of structure is here, and for the niggas that want to do their smart money concept, they'll be waiting for something to break here and turn into a change of character. But that's not what we're going to be doing right now. So we want to approach it in my own way, okay, in the strategy I want you to understand right now. So once prices tap into this point of interest, let's say we use our Fibonacci and we tap into this point of interest, which is looking cool. What we want to see is for prices to push down. So once prices push down without breaking this or without forming a change of character, then we want to see it pull up to this area. So we want to see it pull up back to this area without breaking the area. So we use our Fibonacci to find that area as well. So once we see it, then we put it down, and that would be the best. And some people would be waiting for prices to break this neck. I told you, once prices break this neck, it can go the other way around, or it might not even reverse back. Okay, now most things that are going to happen, it can go the other way around. Understand? Firstly, can go the other way around, that is coming here and breaking here, or it just keep going down and going down, and you miss that opportunity of coming on board to take that trade. Okay, now let's go back to what we are saying here. So like I told you, this is the last break of structure at this area. I told you that we don't need prices to break that area. Okay, so we don't need prices to break that area, and that is it. And you'll be saying, oh, this you'd say this is actually a break of structure, but there's a way we calculate our own break of structure according to the candlestick formation. I have a video on that. You can go and check it out, how we do that as well. Now for the candlestick formation, I said after the last low, we want to see 3 candles above that area, following their self, ascendingly or descendingly. Okay, depends on how you do this thing. Maybe in an ascending order rather, or in a descending order. Okay, without taking if it's going to follow in an ascending order, okay, it is not going to be sweeping the low, be it with a wick or with a body. It's not going to sweep that low, be it with a wick or with a body. Now, there's something else you need to know, that sweeping the low once is actually acceptable. Okay, if it sweeps the low once, it's acceptable. But after that sweep, let's say after this sweep, and it comes to sweep this low again, it is not acceptable as well. Now, once it's coming down, it needs to what? Form another 3 candle. Okay, it needs to form another 3 candle after the recent last buy candle. Okay, and now it doesn't have to what? Sweep the high. But once it sweep the high once, it's actually acceptable. But after that high once, and if it goes below that sweep again, the whole thing is invalid. I have a video on this. You can go there, watch it to understand what I am saying in the whole of this video. Okay, so let's count this. This is the last candle here. Then we have 1, 2, and this is the sweep here. Then we have this third one. Okay, this is cool. This is cool. Okay, then we're waiting for the second one to come down. Okay, now this is the last high, which is this white buy candle here. Then waiting for the 3 to come down. Then we had just 1, this blue, and 2, and the third one wasn't there. So the whole of this thing was what? Invalid, because this is just an equal what? Low. Okay, so the whole of this thing was what? Invalid. Now look at this area looking nice. So this is not a what? A break of structure. This is just an internal structure, or just a single structure. I have a video on this thing. You can go check it out, and it explains everything. Now at this area, look at this last candle. This is this blue one. So everything that happened there was just what? An internal structure onto this white one, which you had 1, 2, 3. Okay, now we already meet up to the what? Terms and what? Condition of the strategy. Now as we're headed up, we continue going on. So we're looking for 3 candles that are going to come down. Now look at the highest one here. We have this one. This is the last highest one. Then we had 1, 2, 3. You can see this did not go above this, and this did not go above this. Then immediately we have what? Our Fibonacci 2 to give us that sweet area that so that Fibonacci 2 to give us that sweet area we'll be looking at. Now look at the sweet area out on our 50%. Then we place our buy, and for our stop loss, this is how I place my stop loss. Look at this area. We have 3.1 pips at this area. So I want to add extra 5 pip because of sleep rage or whatever you guys call these things. I want to add extra 5 pips. So we take it from 3, then we make it 8.2. So 8.2 would be very good. So 8.2 would be this way, which is looking cool. And I want to make, for my first target, I want to do 1-to-1 ratio. Okay, so 1-to-1 ratio would be what? 1.1. So I can use here for my first target, which will be nice. Okay, 1-to-1 ratio 1.1. So this will be my first target. That is lose 1, get 1. Sometimes these things are good, but a lot of people will be saying these things are not good, it doesn't really make sense. And man, trading is a personal journey. You need to understand. Okay, do what fits you, do what you know it's sure for you. This is one of the easiest you can get from the market, and if you do this for 9 pips and you take 1 lot size, depending on your money, I'm not actually telling you to take 1 lot size, that would be like $90, and that should be enough for you for the whole day, no matter the country you are. And if you're in Nigeria like me, that is more than enough for you, my brother. So now the second one would be like 2:1. Okay, so this would be my second TP, and for the final TP would be 3:1. So my final TP would be 3:1, somewhere around there. And to be honest, we got to all TP. Okay, so this is how I do my trade basically, and this is something I want to just chip into this strategy that's going to help you. Now for your first 1 ratio, if you want to go for the whole 3 ratio, it's very advisable that once you get to this first TP, you just quickly do something. What do you do next? You adjust your you take a partial profit. Let's say you take a partial profit of 50% of your margin. You close 50% of your profit, which is actually good and nice. Then you just adjust your stop loss to your entry. Okay, now the trade is a risk-free trade, so no matter what goes wrong in this trade, you would know that you got 50% of that profit and you did not hit your stop loss, and that's something. Okay, and some people, some days, I just like closing the whole of the 1%, depending on the lot size I'm using. If it's enough for me personally, I close and I go. Okay, and I call it a day or buy for that trade and something like that. Okay, then once you head over to this second TP, it's advisable you just move your entry into this side, so no matter what happened, you already secured a whole one. Okay, let's say when you were closing this first partial profit, the whole profit on your trade was $100. When you were closing for this first TP, you closed $50. Now you can be able to close what, $100. Okay, once it gets to this area. Now once it got to this area, you see it never returned back to this area. Okay, so you already secured that one. So all you do is just you wait for the TP. Once you get here, you wait for your TP, and if you see that prices got to your TP or got closer to your TP and started misbehaving, or start to misbehave rather, you just close the whole of the trade. Okay, that saves you a lot of stress. Or you can just do your random 2:1. It's actually good, it's not that bad. Let's say for the first 1-to-1 you get 100, means the second one you get 200. That should be enough for you. You just close and you call it a day. So that is how I come about this strategy, and that is how I use this strategy. Okay, I hope in this video you should be able to have a consistent entering model right now, and that is what I've been using for all my video. Like I said, you start from the higher time frame, then you analyze in the 30 minutes, then you head over to the 5 minutes and you make your entry. Okay, that is all. That will be all for this video, and I hope with this video you should be able to understand everything about this push and retrace strategy, which is simple. A lot of people call it flip zone, whatever these guys call it, but with this video you should be able to start your journey. So if you've been scared of placing a trade in the recent days because your entry models have been failing, please get back to your trading view, analyze your market, use this strategy, and get back to me in one of my videos. All you need to do is just comment on one of my videos if this really works for you, and I'll be glad to see your positive comments. Okay, then if you're having troubles with it, please go over the video again and again. You should be able to understand it. And if you intend following our buy and sell signals, make sure to join our Telegram channel as well. But note that trading is risky. Make sure you apply a very good risk management. I won't be there with you when you're placing your buy and sell. Even if I tell you the risk management to apply, it is actually left to you to follow my procedure or to do whatever you want to do. So make sure you apply a very good risk management that can help you scale through for a long period of time. Remember, I showed you times that this strategy failed and times that this strategy actually got to a better profit. Okay, so you should be able to weigh your pros and your cons if you want to engage in our signal service. So see you guys next week, and remember, I'm going to be dropping the analysis for Euro USD, GBP USD, gold, and USD JPY. So stay tuned, that should be coming out tomorrow. Do have a pleasant weekend. Thank you.